The stock of the day is brought to you by IG, Australia's #1 CFD provider. With over 17,000 markets and extended trading hours, turn US earnings season volatility into opportunity. Get started at IG.com.
So today is a little treat with my guests, Grady Wolf from Bell Direct and Howard Coleman from Team Invest. We're going to take a look at two retailers that reported today and what an opposite share price reaction these two companies had. Universal Store shares up by 12%. Super Retail shares are down by more than 14%. So this is just past 12 a.m. or 12 p.m. I should say here in Sydney as well. I mean, it was a tough first half at Super Retail. Net profit down 10% on last year, driven by an earnings decline at Supercheap Auto, which is its biggest division. The company says competition has intensified and has remained tough for Supercheap into the second half. On the plus side, Rebel delivered a better than expected result. Overall, Super Retail says trading in the second half so far is up, with the gross margin increasing. On the PCP, it's now targeting 28 store openings in FY25. No guidance, as expected, was provided. So Universal Stores, in contrast, posted first half revenue of close to $169 million, up close to 21%. It opened 7 new stores in the half, with 5 more expected in the second half. And it says that sales in the second half so far are up by 31.8%. Just as a side note, management says that it's currently actively looking to mitigate currency risk. So there you go, compare and contrast Super Retail and Universal Stores. We'll start with you, Grady.
Yep. It's a real contrasted reaction today, and I was like, oh my gosh, what a better way to pick, that you couldn't pick a better comparison right now.
Yeah.
Super Retail, I think the way to look at these two is that Super Retail targets the older audiences, so those with money, BCF, Rebel, Macpac, like those traveling, those wanting the adventures outdoors. Whereas Universal, we actually have a buy rating on Universal. I probably wouldn't go near Super Retail, not even after today. It's just not one that I would add to my portfolio. It's kind of in an area that I'm not too keen on investing in retail space. Universal, on the other hand, very keen on it. They target the younger demographic. So you're looking at the TikTokers, the Instagrammers who need all these Sambas and Adidas and the latest shoes every week. And they don't have cost of living pressures. So they have this area of their life. They don't pay rent. They don't buy their own food. They have their first retail job and they spend all their money back in that job. Like I worked at Sportsgirl and I used to spend every paycheck at Sportsgirl, ironically, but you just love what you see. And so all these kids are going, I have no cost of living pressures, life's a breeze, and they buy the latest sneakers. Universal Store is exactly that. So they have absolutely killed it. We were expecting in the retail space very low single-digit earnings growth in the most recent reporting period. Their results up 16.1% sales growth on the PCP. So people are still spending in this space, and that just is true to the point that younger people spend all the money they earn. So that's a really good thing. Another area to look at was obviously dividends I was talking about earlier. Universal Group increased their dividend by 33% to 22 cents per share. We don't often see a strong dividend in the retail space, so that's really good that they did that and rewarded shareholders, which is what we want to see. They also had gross margin expansion of 90 basis points compared to Super Retail, which had margin contraction, showing that they're not controlling costs that well. So the fact that Universal is controlling costs well, another big tick there. And inventory levels is what you want to see kind of controlled, or a healthy level of inventory, because if you have a really high level of inventory, you've got to have high promotional activity to move it through, otherwise you write it off as a cost. And so Universal Store did increase their inventory, but to $28 million worth, and that was only because they opened new stores. So that's obviously going to filter through, and they've got strong sales to prove that. Whereas Super Retail increased their inventory, I think it was to $160 million. So that $68 million, I don't know. It's a high number, and it's much, much higher than Universal's was. So that was a key area of contention for me. So contrasting the two, definitely a fan of Universal, and we have a buy rating on Universal.
Okay, so we'll sell Super Retail, buy Universal.
Yeah.
Howard?
Yeah, I think the interesting thing that you mentioned in the contrast here is one up about 12%, the other one down about, 14 or something at lunchtime. And what that really shows is the market's been getting it wrong. it doesn't really show anything about the company at all. The share price doesn't tell you a thing about the company. What it tells you about is that the market had both these companies wrong. It didn't expect anywhere near as good result from Universal, and it expected a downside better result from Super Retail Group. So all this talk that we've been fed for years about Bernard Malkiel's hypothesis, which got turned into fact, and it was only an hypothesis, of the efficient market theory. He actually called it the efficient market theory, and he said, I hypothesize that if the market was efficient, the following would happen. And everybody says the markets are efficient. Markets are incredibly inefficient, and that's what gives investors wonderful opportunities. So if you had understood Universal Stores well before yesterday, which sounds like Grady and the team there did, you would have known that this was a company likely to do pretty well. And the same in reverse if you look at it from a Super Retail point of view. Looking at the actual companies, I've actually owned a small amount of Super Retail Group for many years. Pays very high dividends. My total shareholder return since I've owned Super Retail has been terrific, but I've bought it each time only when there's been disaster in the market. During the GFC, during the Greek debt crisis, during COVID. During COVID, I think its share price went down to about $5 or something. I may be slightly up, but it was something in that range. And I bought a whole lot extra during COVID. When it got to the $15 and $16 level, its PE was high for a retailer. It wasn't the time you'd be buying. So I think the lesson in all that is to understand the businesses you're investing in. Spend time learning about them, reading about them, try and understand how they make money, because that's how you as an investor make money. Because thinking the market knows what it's doing, well, we just had a perfect example this morning where it didn't.
So you're holding Super Retail, or are you adding today?
No, it hasn't fallen that much. I mean, it went up from about $12 to $16 odd dollars over the last 6 to 12 months or so. So coming down to what's it on now? $14 is still not cheap.
Would you buy Universal Stores?
I don't know enough about it. It's only been listed for 4 years. Looking at this, it looks quite decent in the 4 years. Debt equity is low. Earnings per share is growing fairly slowly, but it's growing. And return on equity is quite good. So if it had a bit more history and we could tell that it wasn't one swallow making a summer and that it could actually do this right through an economic cycle, it certainly looks interestingly enough that I'll probably put it on my list to learn a bit more about it in the next few years and then make a decision.
Well, I'll start your research off. I have I guess we could call her a tween. And yeah, she has no cost of living pressures. I do. But I'm still buying her stuff at Universal Stores. Her graduation dress, a grade 6 graduation dress came from there.
We used to describe it as when we were young, we were peacocks. We loved what we looked like, and we always had to have the very latest fashion. Women generally more than men, but men as well.
Oh, men
were peacocks too. And then as you get older, you stop being as much of a peacock because you have other pressures that become more important.
Now I'm at Kmart, Dale. Don't you worry.
All right, that is the stock of the day. A bit of a compare between Super Retail and Universal Stores.
The stock of the day was brought to you by IG. Turn volatility into opportunity this US earnings season with extended trading hours on over 110 key US shares. Get started at IG.com.